Hey guys, I've always been one of those people who have told you guys if you want to invest in something, do your research, make sure you really believe in the stock. Don't chase stocks that kind of go, you don't have really a backing unless you're totally fine with losing your money. For instance, right? GME, I'm still diamond handing it. It went down, I think, 15% today. Because I only have 4 shares, I'm like, whatever. Let me see if it goes up or not. I actually should sell that stuff. I was planning on selling it back when it was like 210 or so a while ago. But I thought, hell with it. Let me just hold. I'm kind of curious. Kind of like a moment in time you remember. Okay, so other than that, right? Other than me ranting about GME and just kind of lolling at that, I wanted to talk to you guys about a stock that you guys have heard me talk about many times, which is Apple. Now, the reason why I believe in Apple so much, and I've talked about it in detail, is because it has a diverse product line, because it has certain stocks that it has certain products in there that I feel like it just serves as an ecosystem. For instance, right? Once you get into like the Mac operating system, once you get into the whole iCloud thing, it's hard to let go of that stuff. Also, you have a lot of objects that kind of fit together. If you have, let's say, a MacBook, maybe you want to get an iPhone, right? Maybe you want to get an Apple Watch. All that thing works really well. Now, my first auto investment that I did with Apple was on November 12th. Since then, it went up 20% since my first investment because I am doing a monthly auto invest. I looked at Apple stock and I said, hey, let me go ahead and average. So I had my auto invest today. I think Apple went down about 2% today. I'm like, well, no big deal because overall it has gone up. So I saw this comment over here from Secret Boys, and what it said was Coke is still a stronger buy with a 2.9 dividend yield. Apple is going to grow but relies on luxury branding and poor business practices. I just didn't find your criticism of Coke to be coherent. Okay, so I'm going to lay it down to you guys, okay? So Coca-Cola, as you guys know, I'm familiar. It's not just Coca-Cola, it's several brands. So you're looking at all these different brands, Ades, Aha, Appetizer. Have you guys heard about this stuff? I haven't really heard about a lot of these brands. I don't like getting into Coca-Cola because I feel that people don't really want to drink too much bottled drinks. There's always been a push for reducing sugar. I just don't want to get into the bottled drink sector. But it's not only because I find this kind of thing to have a lot of competitors, right? What's the difference between Gold Peak Tea, Honest Tea, let's say Snapple, another brewed tea brand? I can't tell you what it is. It's just tea. Like some people will say, oh, but I can tell the difference between Honest Tea and... Look, I just can't get excited about this stuff at all. So I think Coca-Cola is very good with diversing their products line, but I'm just not excited about investing into drinks. And I know some people, like Secret Boys over here, is just like, Jesse and Wade, they're huge. Okay. Let's talk about this stuff too, okay? So when you deal with food and dining, you also are subject to recalls. Now, this is not too big of a recall, it looks like. This came out... Wow, look at this. Came out earlier today. And they're doing a recall about their Minute Maid drinks, berry punch, fruit punch, strawberry lemonade. They have some contamination in there in terms of like foreign metal objects. And then not only that, right? Because this is made in a plant, they have to recall Coca-Cola and Sprite products too. See this? So, right, I think it's good that they did the recall, but I just don't like getting into the food and drink sector because of recalls when it comes to this kind of stuff. It's different when it's a consumable versus, let's say, a laptop. That's just my thing. I also think that I can't think of one benefit of drinking Coca-Cola. Now, people will criticize me and say, well, it's tasty, Erica. Oh, maybe it has health benefits. Yeah, maybe I could go and think about... For instance, there are people in Mexico who think Mexican Coke cures remedies. And right now there's a lot of Mexicans in Mexico have diabetes because they're just drinking so much Coca-Cola. I've known about this for years. So I don't want to get into a sugary drink. I don't think this is very healthy. So let's look into Coca-Cola stock over here. 57.76, okay? You can see the dividend yield is 2.91%. Okay. Still a stronger buy with 2.9 dividend yield. Okay, it's a high dividend, I'll give you that. Apple's dividend in comparison is only, let's say, 22 cents per share, 0.6%. So we're looking at the amount, right? Let's just focus on this. 0.22 cents per share versus, what is Coke's dividend? 168. I know what you guys will think. Okay, well, of course, Erica. See, you better invest into Coca-Cola, because instead of getting 22 cents a share, you're going to get $1.68 a year. Okay, let's talk about the growth, right? So right now, Coca-Cola is at $57.76. I'm just going to round it to 20, okay? It's going to be higher than $1,000, but let's just say if you invested a little over $1,000 into Coca-Cola, how much dividend would you get? $33.60 for your $1,000 purchase or so. Okay, $33.60. Hold that thought, okay? Let's talk about how much the stock has grown. So let's look at the 1 year. 8.43%. 5 year, 38.38%. So you're looking on average about 6% a year if we're going to talk about this, right? Let's say I invested back in 2016. I held on to it now. My portfolio, if I put $1,000 in, would have grown about 40%. And then you would also get, maybe, I don't know how much the dividend was, but let's just times this by 5. Let's say about $165 worth of dividend. Okay. Now, on the flip side of this, right? I've always said to you guys, and I'm pretty sure I've always said this, if you guys focus on dividend, some people are just so blinded by this 2.91% or what they perceive to be a high dividend, they don't take into account it comes at the expense of growth for a lot of these stocks. So sometimes when I see stock that has high dividends, it comes at the expense of growth. Like the stock does not grow as much as it could grow. So for me, I'm more about the growth stock, because I don't plan on living 200 years. I don't want to have 40% growth every 5 years, and then I'm hoping Coca-Cola doesn't have a big competitor coming out in the soft drink sector. I know they're also involved in other things like soups and so, but it's just I don't want to get into this sector, okay? So other people have recommended to me Verizon over here. So Verizon is $50.28. Let's look at the dividend yield, 5.09%. Let's say I invested about $1,000. So let's say 20 shares here, right? The dividend for Verizon is, let's see over here, Verizon stock dividend yearly. It is $2.56. Okay, so I did this wrong. So every year I'll make $51.20 off of investing into Verizon. Okay, let's look at the 1 year. 1 year. Okay, I went down 16%. So if I invested 20 shares, I would have lost over $180 this year, right? Assuming it's a $1,000 investment, right? Wait, let me see over here. 90, 20. Yeah, about $180. But I would gain my $51. So I guess I'm only at a net loss of $130 if I invested this year. Or then, you look at this, right? Oh, it actually went down over the last 5 years. Okay. So in the last 5 years, if I invested back in 2016, I might have my 5 years of dividend gains. Let's just times this by 5. $256. However, when I look at my portfolio would be in the negative over here. Right? I can't get into that. Now, let's switch it over, because you guys know I don't like high dividend growth stocks, because again, it comes at the expense of growth. Let's look at Apple, okay? Apple, 1 year it went up 44%. 5 years it went up 506%. Yes. The dividend of Apple is abysmal. It's not that great. Okay, it is 70, let's just say 68 cents a share, right? So if the stock price right now is about 175, let's just say 5 shares. I know it's a little under $1,000, but It's not that big of a deal, okay? So let's see over here, 68 cents times 5. Okay, you only got $3.40 in dividend. However, you have far more growth in that 1 year or 5 year of Apple stock versus your 5 year of Coca-Cola stock and 5 year of Verizon stock. Like, please explain to me how your 5% dividend or your $256 beats out going for Apple. See, I just don't get it. I just don't get it. So we'll talk about this, right? Apple is gonna relies on luxury branding and poor businesses practices. Apple does not. Okay, I admit Apple is a luxury branded company in terms of when it comes to like the laptop sector, smartphone sector, a lot of the technology, right? However, they're not going to go anywhere. They're constantly expanding. It's not like they just made one computer and they say, we're not going to improve. They're constantly innovating. They're coming out with these glasses later on this year. They're also coming out with, allegedly, right, some kind of Apple car. You think Coca-Cola is going to get into an Apple car in some kind of car sector anytime soon? No, they're going to stay in their lane. They're going to continue making soft drinks or continue making soups or, food products. It's nothing exciting. And that's the reason why when you look at Coca-Cola, it's not going to have that kind of growth compared to Apple. So yes, if you want to pat yourself on the back and say, well, Coca-Cola is a more moral company than Apple, then you can. But I just think that you have more people dying from sugary soda drinks than you do have people dying from using an Apple product. Like, tell me if I'm wrong. Diabetes is a huge thing in the world, especially in the United States, as well as obesity. And Coca-Cola is not healthy stuff. Like, yes, you have teas, you have coffees, but a lot of the time when you think of Coca-Cola, you think about their sodas, like their Bark soda, their Coca-Cola. And yes, you can drink a diet soda, but there's also Fanta. It's a lot of high sugary drinks. So I just don't like it. I just don't like investing into Coca-Cola. Oh, Apple car stock killing people. The car's not going to be able to start for themselves. It's also people control the cars, right? Harley Davidson has I haven't seen any boycott about Harley Davidson because of that. Tesla, I haven't really seen a boycott of that kind of stuff. I don't know if well, there has been some deaths affiliated or associated with like Tesla full self-driving, but people are still into Tesla a lot, right? So I just think to myself, like, I don't want to get into this whole thing where people want me to get excited about 2.91%, which is, let's see, $1.68 per share, and focus on that instead of the bigger picture. Like, when you think about this stuff, you really need to think about the bigger picture of these stocks. Yes, Coca-Cola has been around for many years. Yes, if I did invest into Coca-Cola back, let's see if I can do max. Back in the olden days, I would have been rich, but I wasn't born around like the 1900s or so. Yeah, I was like born around 1988. So and I didn't even get into the stock portfolio thing until 2018 or so. So imagine if I invested all into this, right? Let's say I invested around December, right? Let's say I invested around here, $47. If I put all my money in here, I would have got about a 20% return over the last 3 years or so. But then I guess I could pat myself on the back and be like, but my dividend is high. No. I don't want to have such abysmal growth. I rather have more aggressive growth. And this is the reason why when you hear me talking about stocks, you see me mostly focused on this kind of stuff. You see me focused on technology, because technology is something that people use every day. I'm using a computer right now, right? If I had a cell phone, what kind of cell phone would I have? I might have an iPhone. Now, I don't have an iPhone that I use as my main phone, but you guys get what I'm talking about. That kind of stuff is harder for people to get to say, I don't want to purchase it, than like a Coca-Cola product. Like people look at this kind of stuff and they're like, I don't want to invest into, I don't want to buy a sugary drink. Okay, I'm just going to buy some water. You hope that maybe they buy Dasani, but what if they don't? What's the difference between Dasani and then Aquafina and things like Arrowhead or, like those kind of drinks? Like I've seen so many bottled water drinks. I can't tell you really the difference. Like there's a Nestle one too. It's like, I don't know, it's like, so it's just like, oh, I don't want to get into that kind of stuff. So, let's see over here. Yeah, so it, like Lennon says, right? You got to get in at the right time. I just think to myself, like, I don't want to deal with getting in at the right time. I rather think about the long-term view and then ask myself, how do I see the stock being in the future? Right? Do I think the stock has a positive outlook? And once again, I don't think about stocks in terms of, like I don't get swayed by this whole thing, right? Luxury branding and poor business practices. It's like, okay, well, Secret Boys, why don't you invest into a stock that grows? Why don't you invest into a Coca-Cola? Are you something like 300 years old, so you're gonna get excited about this stuff? Like, I just don't get it, I really don't get the Coca-Cola stuff. So I think this kind of, a lot of the stuff comes with boomer mentality, where people say, oh, let's invest into a stock with high dividend yields, and then they just say like, oh, I don't care if my stock only grew 10% over the last 2 years. That high dividend. It's like, oh, yeah. So I know I'm just like ranting about this kind of stuff, but I hope that my criticism of Coca-Cola is finally coherent. Follow the money. Follow the bigger picture here. Don't just crap on Apple for the sake of crapping Apple. I know where a lot of my subscribers come from. It comes from a channel where basically the main thing that people pick up for several videos would be, F Apple. But you don't let that sway you when you're an investor, right? You want to look and say, okay, if this deals with money, look and see, what is Apple doing? Do you think that they're on a positive trajectory in terms of growth? For me, I do think Apple stock is on a positive trajectory to growth. And come in 1 year, right? Apple will have more growth for sure than Coca-Cola. Now, I know Secret Boys over here is going to be like, oh, even if Apple goes up in stock, let's see, Apple stock price, even if Apple goes up to like 200, 250, right? Secret Boys is going to be like, oh yeah, Coca-Cola's still the winner. Yeah, no. Apple will get to 250 or 225 much faster than Coca-Cola getting those gains as well. UPS stock, why? Okay, I don't know much about the shipping thing, but I don't want to get into shipping because, like, look, UPS stock, I think there's just so much competitors. What's the difference between UPS and FedEx and DHL? I don't know. Like, it's just like, I don't want to get into that stuff. If it has too many competitors and I can't think of what the competitive advantage is, clearly, it's not attractive to me. This is the reason why when you hear me talk about, let's say, Apple, I clearly know what the competitive advantage is. They're like far away from, let's say, Samsung and Lenovo in terms of branding and product lineup. Like, nobody gives a crap about Lenovo's products. Nobody gives a crap about Dell product. When was the last time you heard anybody say, ooh, Dell is dropping out a new laptop? No one says it except maybe tech nerds, and that's it. The people who are like, oh yeah, let's get excited about this computer, like nobody else, like 90% of the population's never heard about, because they don't, it's all about branding. It's all about advertisement, and you get the people into a brand, and then the brand works for them. It's so much more powerful. I can't think of any criticism in terms of Apple products that I've had with like crappiness, except maybe like the hardware being fragile. But keep in mind, my computer is very thin, so I figure if it's thinner, it's going to be more susceptible to break, and if something breaks, then of course there's a price premium to that kind of stuff. Okay, so let's look at the UPS thing over here. Okay, I mean, UPS isn't bad. I just don't feel comfortable investing into a shipping company. Like, what happens when, let's put it this way, right? What happens if packages get to be more expensive because of, let's say, rising oil costs, and then people say, you know what, we don't want to work with UPS anymore. We rather just have everything shipped with like USPS or something, or FedEx instead, right? That's why I say, like, I think a lot of the shipping carriers kind of like the cell phone carriers, where it's just so much competition. I can't tell you what the difference between Verizon, AT&T, and T-Mobile is, except like, oh, one carrier claims to be better than the other. Before, for the longest time, I always thought Verizon was the superior one, but then I find out, like, for instance, in certain parts of the country, AT&T has superior service and it's cheaper than Verizon. When I worked at Amazon, a retiree from UPS has UPS stocks and would put the dividend back into the stock. Okay. I mean, yeah, that's what some people do. You know, I know people who have these kind of, I don't want to call them anchor stocks, but I'll call them like really safe stocks. And then when they get their dividend yield, right, they also reinvest it back into their company. So for me, right, my auto invest, the way I have my auto invest set up is I have it set up where it pulls my dividends first. And then after my dividends is done, then it pulls out from my bank account. If, you know, I wipe out my dividends. So I have my own dividends going back into my stock, and then my stock gets bigger and bigger and bigger. I feel like if you're not averaging, if you're not reinvesting your dividends, then it's like you just have money sitting there. You might as, if you're already investing money, let's say you invest, give you an example, $10,000 into a stock, right? Or you have a $10,000 stock portfolio. The dividends that you make from that, make sure you have it going back into a stock actively. You don't want to be like 5 years, 10 years down the line, you're like, ooh, I got all my dividends, but it's just sitting there. Like, you have a stock portfolio so you can reinvest those dividends, unless you're using those dividends for something else. So for instance, let's say you have the dividends and then you pull it every year to take care of your bird or something, Is the Apple Card gonna have Windows? I do think that of course there's gonna be Windows, but it's not gonna be Microsoft Windows, I'll tell you that, because nobody cares about that. I'm just kidding. I'm just throwing the shade. I'm invested in Microsoft too, okay? So let's talk about Microsoft, right? So I acknowledge, even though some people might think that I'm like total only into Apple, I think Microsoft's a very good company as well. Again, I'm very into tech. So Microsoft stock over here, let's see. Everybody kind of went a little down today. It's totally fine. So 1 year stock, 58%. 5 year stock, 444%. And then let's do the direct comparison with Coca-Cola again. I might not be coherent. Okay, let's see. My 1 year of Coca-Cola is 8.43% versus my 1 year of Microsoft is 58%. My 5 year of Coca-Cola is 38%. See this? 5 year, 38% for Coca-Cola. 5 year for Microsoft is 444% growth. The dividend, if you want to be like Secret Boys, you want to focus on that, the dividend is 0.73%. So annual dividend for Coca-Cola is this. Let's say let's see. So 248. So 248, and then because the stock is 339, you'd only get 3 shares, right? So let's say 248 times 3. No, 248. $7.44. So instead of making whatever you would make from Coca-Cola dividend, you would only make $7.44. However, your growth will be much higher yearly than your $7.48. Personally, for me, I rather have 58% growth per year than just 8.43%. I rather make significantly more money than this. So like I told you guys, right? Like, this would probably be about $80 a year if you were to go on this let's see, $80 for $1,000-ish, right? Versus this one, 60% of, let's say, 1,000 would be about $600, right? So, what would I rather get? The $80 or the $600 a year? Yeah, so I'm gonna go with Microsoft over here. Versus Coca-Cola. And this is again, I hope it's very coherent. I hope it's very clear why I invest the way I invest, kind of thing. I don't want to be just clinging on to these like high dividend, low growth stocks, because it doesn't have enough growth for me. Now, if you are a multi-millionaire, right? Then yeah, maybe you could invest in Coca-Cola stock and you'd be like, well, I'm investing $5 million. So yeah, I'm totally happy with the 8% gain or so, or the 33% gain from 5 years. But for me, I rather have more gains than that. It's just, that's why I say, I think Coca-Cola overall is a loser stock. I think that you can get more gains from other things. And it's not just one specific company. You can do an ETF instead of doing this kind of stuff. Because, like, I think a lot of times when people get into, like, stocks like Coca-Cola, they get into it because they're just relying on information that's very outdated. And you guys can criticize me about that, but the numbers do not lie. You know, the percentages do not lie. You have more growth from a technology stock than a beverage company. And people are more excited about technology than they are about Coca-Cola. Okay, so I will talk to you guys later, and you guys take care. Let me know in the comment section what your thoughts are. I hope I didn't come too hard at secret boys over here, but I just want to be a little bit more coherent, so I had to make this whole video about this, and I stand by my